The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 22nd. Can you believe it? March 22nd already. Fantastic Friday edition of today's opening bell on The Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's really all about. So let's go take a look at one of our tools. And, you know, this is a special Friday tool because on Fridays, it's all about your health and your wealth, because we got Nico and Paige from 12 to 1. So today's tool is treat your body like a temple. You know, an ancient scripture says, treat your body like a temple. So the question is, do you treat your body like a temple? Something that you take extremely good care of, or do you treat it like a woodshed? Here's the thing. Our mind and our body work together. They work together as one. We've got to have our body functioning well. Our body is the support system for our mind and our spirit out there. You know, and everybody's got to have a good spirit. You've got to have a good body. Our body supports us with strength, our power, and all the vitality that we need in order to be able to take us to where it is that we want to go. Now, the cool thing is that it really only takes 30 to 60 minutes each day in order to be able to have strong, healthy bodies out there. Maybe just a few simple things that you could do. And I know that these little simple things, they'll go a long way. For example, you could just simply take the stairs instead of the elevator. I'm going to do that. I am absolutely going to do that from now on. I'm going to do that absolutely, for sure. Not just the stairs on the way down. We're talking the stairs on the way up. How about just simply you're going to be out shopping. Somebody's going to run out to the grocery store or retail store or whatever it is. Now look, what I want you to do today or tomorrow, I want you to look for that back space out there. Don't find the closest space. Find the one in the back. You know, there's another benefit of finding that space in the back. Your car won't get dinged up as much. Not as much competition for the spaces in the back of the parking lot out there. You know, if you don't like to jog, walk. If you don't like to walk, swim. Of course, everybody up in the Northeast, you're going to have to do some indoor swimming. I understand you're in for some more snow up there. But maybe if you don't like either of those, go ahead and take up a sport. Be like Basil, play all kinds of tennis out there. Or be like myself, play some golf. You know, and when you're playing golf, just have your buddy drive the cart. Have your buddy just go ahead and haul those clubs, and you get to walk the course, just like you're on the PGA Tour. Nothing wrong with that. Folks, it's all about strength. It's all about the strength of our muscles. It's all about the strength of our mind. Treat your body like a temple. Not like a Shirley Temple, though. Let's go take a look at these markets out here. We've got the Dow futures up about 37 points right now. ES Mini up 4. NASDAQ futures up about 7.5. Russell up a couple of points. King dollar back about 15 ticks right now. Gold trading down $9. That's off about 0.5%. Out at 16.04. Silver off 57 cents. Almost 2% back from yesterday's close out at 28.63. Light sweet crude on the move this morning up 44 ticks, up about 0.5% out there. Across the pond, we've got the DAX is flat off $2 right now. The FTSE's up 17. Over in Asia last night, a little bit of a mixed bag. We had the Nikkei off almost 300 points. That was off over 2%. Shanghai basically flat, up 4 points out there. And the the Hang Seng, I should say, off 110, off 0.5% even. Our call-in number is 877-927-6648. If you are listening on the radio or your mobile device at TFNN.com, thanks so much for doing that. Remember, this show streams live on those smartphone devices, on those pads out there. Just go to the homepage at TFNN.com. Over on the right-hand side, what you will see is a button there with 3 little smartphones. Click on that, and you'll be able to catch this show streaming live out there. Let's start off by taking a look at the ES Mini. Let's look at the 30-minute chart out here right now. Trade out at 1543. If we take a look at it, not really. It's moving more towards the bought condition. Hasn't totally gotten up there just yet. If we take a look at retracements, see what's actually going on. We'll come off of the highs that were put in here back at about 3 p.m., in fact, right on the 20th, so a few trading sessions ago. On the 20th, that price point high was 1555.75. Let's come down to the low that was put in here at 1:30 this morning. ES Mini gets down to a level of 1535. What we can see right now is that it's made a dead cat bounce. It's made a 0.382 bounce out there. No A to B equals CD pattern here just yet. Looks to me like what the ES Mini wants to do is run up to about 1547 this morning, maybe 1550. We can see this little black horizontal line coming across the screen here. That has acted as a area of resistance, more resistance, if you will, than support out here. So I suspect that that's what we will see the ES Mini do. Once it gets up there, that might be a time when you would consider selling the market. You'd have your back up against the wall, and we're going to certainly do that when we do the next hour. We do the Nadex Bull Bear binary option hour out here. We did have the S&P 500 close below that 1546.72 yesterday. Now it closed just slightly below that level, but it is cracking the ice out there. Where did it actually close? The S&P closed at 1545.80, so just slightly below it. But that is your first crack in the ice out there. We haven't seen a close below that level. We'll switch over to the index here in just a bit. But we have now. You also had some bearish candles that showed up in the Dow. We had a bear, either bear sash or bearish engulfing candle yesterday. We haven't seen one of those in quite some time inside the Dow. That's been the headline number out there. So the Dow now setting up a resistance area for sure. If we go take a look at the daily chart here of the S&P futures, let's go see what we've got going on. If anything, much a real quiet market out here, and real resistance, a real breakout on the S&P futures would have to get above the March 15th high. That would close above that, I should say. And that would be out at the 1558.75 level. But the bears are starting to come out of hibernation out here. We'll see if they can get a foothold. If you take a look at the ES Mini, even though, even if you take a look at the S&P 500, even though it has cracked that 1546 level, that's really the number that you're going to be paying attention to today. If you see it close below 1546.72, you will have seen a rejection of that October 11, 2007 swing point, both on a weekly and on the daily chart out there. And what that sets up nothing more than a nice, healthy pullback out here. Your first level of support on the ES Mini would take you all the way down into the swing points here of February 26, right around the 1482 level. We can see that we've got that 1.618 butterfly pattern out here. We come off of the November 16th lows all the way up to the high that was put in here at March 15th. We'll also see just slightly below that, right around the 1475 level, is your dead cat bounce, is your 0.382. There would be nothing wrong with the market. In fact, it would be powerful for the bulls, especially if it comes back on some light volume out there. With the market, with the metals moving out here, let's go take a look at the metals. First, though, we'll start off with the currency, just because that's the first tab that I see on my screen here. So let's go look at the currency. We can see the pound here continuing its move up. Now, the pound here is going to run into resistance. This is the daily chart that we're looking at. That first line of resistance, it's nearing that level. That is going to be the price point. We're going to use the bottom of the swing point here of June 1st out here. That low is 1.526. That is on the Great British Pound out here. Right now trading out 151.8. and so it's got a bit higher. We can see here the pound having been in the oversold territory. It's moved out. We know it's moved out with a hammer, with a bullish engulfing, and really no bearish candles after it made that bullish candle here at the bottom on the daily chart. If we go peek down and see what's going on intraday on the 30-minute, let's pull that chart up here on the screen. Let me just refresh my screen, make sure I've got the good, accurate data, and then we'll go take a look and see if this thing is overbought, oversold, just exactly where this might be at. So we'll put up that RSI, neither overbought, no oversold. So the Great British Pound can continue its trek up here. We can see we had a little bit of a move at 5 a.m. this morning. You can see that right now, price really just traveling with inside this body here. So still very bullish looking at the moment. Let's go in and peek at the euro, because in the euro, that's going to be really the key currency chart here for us to be paying attention to. We're looking at the daily chart right now. That's traded out at about 129.46 out here. As we take a look at this, what we know is that right now, let me erase a couple of things here off of the screen for you. You can see here the A to B equals CD patterns. On the way up, it made a 1 to 1.618, A to B equals CD. So far on the way down, it's pretty close to making a 1 to 2 A to B equals CD on the way down. But let's go ahead and get rid of the one on the way down here. And really, the number to be paying attention to is going to be the low of that swing point from January 4th out there. As we draw the line, we'll use a black line, go across the screen. What we can see is that that is the area of resistance. And the area of support, we can see the tight trading range. We're going to use the low of the December 10th swing point out there. That low, 128, looks like 128.4 out here. So we can see that the area of support has held pretty well. We'll go ahead and put that in black as well. And so a very tight trading range. And what that's really setting up now is a move. Let's get rid of this A to B equals CD on the way up, just to make it easier for all of you that are watching on Tiger TV. We can also see here, as you take a look at the euro here, it is not oversold, so there's no reason here for the euro to not continue its move down. And it wants to continue its move down. It wants to get down to the point, I take that. Okay, it wants to make a 100% move of a move. That the actual support level, I didn't realize that at least this morning, and the actual support level that it's trading into is also the 0.786 retracement. So this is now it's not a 0.786. It's not so much a 0.786 Gartley. Let's put the colorful tool that I've got up here on my screen inside Anson. And the problem is that that's not the most beautiful looking butterfly. Usually when you take a look at those butterflies, you like to see a little bit more of a not so lopsided, colored in, shaded in area out here. So I won't say that in this case here it's really a true Gartley buy pattern that's at that 0.786 level. And really what I was getting to there is when a 0.786 Gartley fails, that turns into a butterfly pattern. Looks like really what the euro wants to do is make a move all the way back to the lows of November 13th, out at about 126.59. 877-927-6648. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Futures really unchanged since we left. Let's go peek in on gold here. We've got gold trading off $9 right now, out at the 1604 level. So trying to get back and test the swing point here. Well, you know, your real swing point happens to be February 21st out here. But what I've been really benchmarking has been the candle session from February 20th, that wide-ranging body. We had price really traveling with inside there, tried to break out once on February 26th, came back inside that part of the range. Right now, all that it's doing is testing that level. We do have some resistance here, a couple areas of resistance that you could take a look at on gold. The first level being the bottom of this hammer candle that it broke. That price point out here is 1626. So we'll want to keep an eye on gold as it gets up to 1626. That next level that you can certainly use is that downtrend line. That downtrend line coming off of the highs back in October of 2012. 1797 is the first area that I'd use as my touch point, and then the November set of candles. Where that price point is, you know, hard to say as gold moves up. It's probably right around the level of about 1636. So we're looking at 1626 to 1636 before we get any kind of indication as to whether or not gold really wants to break out. And that's that trend line there. You know, it's a short-term trend line. But it is a good trend line for sure to be paying attention to, and that is on gold. Let's go take a look at silver out here. You've got silver trading back about 57 cents right now. almost 2%. We can go ahead and I think we can go ahead and put that same trend line out here. Now, that's going to be quite a bit higher. So let's go. We'll start off with that October 1st high out there. That's $35.44 out here. Yeah, see, that trend line is so high out there. Let's actually, so that would be one trend line. Let's take a look at the shorter term trend line out here coming off of the swing point. It looks like November 30th we were at 34.42. Yeah, so we'd use 34.42, and then I'd go ahead and use as my next touch points out here. I'd use the January 30th high out there. Now, silver, as we can see, silver has been struggling as compared to gold when it comes to that body of February 20th. You know, the body of February 20th, I mean, this has been a very, very tight trading range. Let's put this and make this line going across here. We'll make that a solid red. Let's make it a solid black line out here. I think it'll be easier to see. So I'll put that at the bottom as well, and then we'll blow that up so we can see that really, really narrow-banded trading range out there. And that is unusual. That is very unusual. So looks like it could be coiling up like a rattlesnake. The question is it going to coil up to bust out the lows, or is it coiling up to take out the highs out there? And that is on silver. We won't know until it actually coils and does it. In this case here, gold coiled up and moved higher. I suspect that silver will do the same thing. If we take a look at light sweet crude, right now trading out at 93.04. It's made a 0.7. Now, this is the 30-minute chart that we're looking at. Looks like it has made a little Gartley sell pattern. Let's see if it's got the A to B equals CD may not have completed here just yet. Yeah, it's close enough. Actually, 93.20 would just about do it. Well, you can see here, I've got the tool turned on my system that just simply measures the swing point retracements and expansions. And we can see here, and, you know, it's a beautiful thing when these numbers show up. I'm going to blow this up here. This is a 30-minute chart that we're looking at. And what we can see here is coming off of the low right here, the low swing point coming in at $12.30. That price gets down to $91.84. And what we can see here is that we made a 0.38 to the 3.382 retracement is really just at about the price level around 92.43. Also had this nice little 1.618 expansion. I don't know if you can see that, but just a small expansion. Again, we're looking at a very intraday time period chart. Take a look at, you've got a 0.618 retracement coming in right at about the time frame of, looks like about 11 o'clock in the evening, and then you had price moving lower. Look at all these Fibonacci numbers, folks. You want to make sure that you're using 0.382, 0.618, 0.786, and on the expansion side, 1.272 and 1.618 out there. Let's go take a look at. Sorry, I had a message coming across my screen, so I was thinking one thing and reading something else out here. Let's go take a look at bonds. Let's go see what bonds are doing. Trading out 143.1. Bonds look like they still want higher price. They want to go up and test at least that resistance area, an important resistance area. That's going to be that January 2nd candle that you're going to want to be paying attention to, 144.29. If we do take a look at what kind of retracement has been done off of the recent high to low, the recent high would be the March 4th level. That got up to the 144.29 all the way down to the low that was put in here on March the 8th. What we can see so far right now, 0.786. See how price got up to that 0.786 level? Looks like bonds are trying to bust through that, get back up to that January 2nd resistance level. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 51 points. S&P's up 6, Composite up 14. Small caps up 3, Microsoft up 6 ticks, Intel up 13, Google up $1.58, Apple up 222. That number 222 keeps popping up in my life. Don't know what that means out there. Popping to the upside, though, we've got Nike. That's not up 222. That's up 9%, up $4.93. Right behind them is Apple. Then you got Tiffany & Company, TIF. They're up 3% this morning. You got SanDisk, SNDK up a couple of percent. You've got 3D Systems, DDD, Triple D up 3%. We'll go take a look at that stock chart. And anything else that you'd like, just give us a call at 877-927-6648. Tibco Software, Tibix is the ticker symbol, TIBX. That is off 15%. We'll go see if there's some volume behind the move. I suspect that there is. Monster Beverage off about 3% this morning. Informatica, INFA, off $1.21. That's off 3%. You've got Allied Nevada, ANV, off 360. So let's go start taking a look in on some of these stock charts. We've got Apple up here on the screen. Apple Yesterday, just pulling back slightly, 13 million shares. It made a most recent high back here a few trading sessions ago on March 19th with 18 million shares. Apple wants to go ahead and make a run for that 483.38 level. If we take a look at the retracement that it's done thus far, coming off of the high of February 11th, that's what I would use all the way down to low. Put in on March 4th, what we can see, really hitting an exact 0.618 retracement. That number right around looks like around 459.75. The actual high coming in 3 trading sessions ago was 460.97. How about that? Not too bad. Let's go peek in on Nike, though. Let's go see what Nike is doing. Holy schmikeys. What movie is that from? NKE. So let's go take a look at Nike out here. Gapping up, doing it with some decent volume. The market's only been open for 6 minutes, and so far you've got 2.4 million shares. It's up above the 1 to 1.618 A to B equals CD. That A point that we're taking a look at starting right down here. This thing had gapped down big with volume. That level was tested recent. Well, we can go take a look. So we will take a look at it. Now, the A to B that I'm taking a look at here on Nike, let me just refresh my screen to make sure that I'm using all accurate data out here. So we've got this little doji candle here where it gaps down on June 28th out there. It does that with 11.8 million shares. We'll come back to, it does that with 43 million shares. Gets down to a low of 42.55. That's your A point. Your B point comes in, looks like right here. Let's see if this is the actual candle. September the 10th, that high 50.46 actually, on September the 12th out there, 4.5 million shares. So it crosses the B point with conviction. Now, this is the way you'd like to see an equity cross a B point. Take a look at this, folks. You have it gap up. This happens to be on December the 21st, and it takes out the B point with 14 million shares out there. So there's your confirmed A to B equals CD. The 1-to-1 A to B equals CD, that's where it gapped up into. 52.77 would have been the 1-to-1 completion. That price point, the high of that day was 52.74. There's no way that that's only going to do a 1-to-1 A to B equals CD when you gap up over the B point like that and you do it with that type of conviction. If we take a look at this, you can see that the price here traveled with inside, not just the body, but the entire candle session for about 4 days before it decided to resume its move higher out here. Now, it looks like that low actually was tested. Let's get rid of the A to B equals CD out here. Let's get rid of this. This will be easier to pay attention to. So let's take a look at this high volume low out here, and let's draw the line across the screen. We'll go ahead and put that in black. So here's a high volume low, which says high volume lows are about, I think David White did the study on it, and it's 80+%, I believe, that high volume lows end up being tested. The case here of Nike, we're looking at that June 29th level. 43 million shares. Now, the top of that is $45.25. Look, it comes back down here and tested with this little doji candle back here on October 26th. Does it with 6.2 million shares. That's a nice test. If that wasn't enough, comes back and tested again with 6.5 million shares on November 14th. On November 15th, it tested with 3.8 million shares, and then has not looked back since. Now, this is up over its most recent swing point high in May of 2012. And it's up over that level with volume. The volume on that trading session is 5.1 million shares. It'll have more than 5 million shares today. It's already had 2.4 million shares, so it should be no problem there. Let's put this on a longer-term chart. Let's go take a look at the monthly. That's certainly not the right price spread here. There we go. So as we take a look at the monthly, it is up over its highs out here. If we take a look at what it's taking now, this is an untested area of resistance, most certainly on the monthly chart. That May high had 102 million shares. Now, volume so far through yesterday, 59 million shares out there. So it's going to need a lot more energy to get up and over and stay over that with any kind of conviction. Let's put this on a weekly chart, though. Let's see what the weekly chart is saying with regard to volume. Let me refresh this because that's not right. There we go. So that same swing point that we'll be looking at, let's just draw the line across here. You got a shooting star type candle that it's taking out. So there was a bearish or resistance type candle so that it's getting over. Now let's see if it's over this. Well, we won't know till the end of the trading session, but we can pretty much gauge it. So through yesterday, it's going to have the volume to get up over the weekly. Through yesterday, about 17 million shares. What it's taking out is 24 million shares. So very likely we'll have the volume. Now, the key here will be as this pulls back and it retests, does it stay above that level, or does it come back inside this little consolidation range that it has been building for quite some time? You're going all the way back into the middle of last year out there. But Nike looks to be moving higher with some conviction, at least on the weekly and the daily chart, not confirmed on the monthly. Let's go take a look at Tibco Software. Let's go see what that is doing this morning. The ticker symbol here is TIBX. So let's go see if there's some volume behind this. Not RIBX. How about TIBX? TIBX. There we go. Got that fat finger problem. 1967 is what it's trading at, and it has a big volume, and it's coming to. So we were talking about high volume lows out there, and I was talking about that it'll come back and it has a 80% chance of testing it. In this case here, this one kind of gave you a little bit of a head fake, because in this case here, this comes back and it actually does test it. Let's put the line across the screen here. So this thing breaks down with 24 million shares, 23.1 million shares on December the 5th. Gets up, climbs back up above it. In fact, it gets into, so this is, we'll go back and take a look at the Nike chart and see what happened as it got to its resistance level. In this case here, what Tibco did, so we'll put this in red coming across the screen. So this is good to look at. So as we take a look at Tibco, we're taking a look at the area where it gaps down. And that is the trading session of February 4th. That low out there is 2430, 2.1 million shares. So gaps down on the following trading session, does it with 24 million shares. As it works its way back up, it works its way back up with 5.1. Remember that 5.1 is being benchmarked against the 23. And then your second benchmark is really the 2.1. Couldn't bust it up. And that very next trading session moves higher with 3.5 million shares and rejects that area. So resistance on this most certainly is the low. It's been tested. It's been tested twice out here, which is in essence, the February 4th low, 2430 out there. It tries to get back up here. And here was really your signal, because on March the 15th, it moved up into this area with now 2 million shares. That 2 million shares going against 3.5, 3 and 5.1. So not enough to bust it up. And when you can't bust it up, what does that say? It says, well, you'll try to go bust it down. Now, the question was, is it going to come back and just be in this little sideways trading range here? That meaning, would the high of December the 5th, since that was tested, you can see that was tested right here, but you actually got a little close below that level on March the 5th out there, whereas Nike, I believe it did not close below the actual and get into the trading bar. But regardless of whether it did or it didn't, folks, in this case here, now what it's doing is testing the bottom. And it hasn't actually got there just yet. I believe the low on here, let's go take a look at it. The low of that trading session is 1895. Has not gotten down there. We'll see what kind of volume so far in 13 minutes of trading, 4 million shares. So 4 million shares is going to go against a day with 23 million shares. Let's pull this back even further. And we can see, let's put this on a weekly. It'll be a little bit easier on the weekly chart. So we can see the area of resistance, or the support, I should say, that is inside this equity. Let's draw the line across the screen here. And that line, as you can see, really set up. And you'd want to move this up just a tad. But we can see how important the swing point right now, how important the swing point price on this chart is at 1843. So 1843 has volume on the weekly basis of 24 million shares. Came back into that area, but it came back in pretty hot, 36 million shares. And this week through yesterday, 9.6. But this is going to be a very important area of support for this equity out here. If that area breaks, there are no other stairs up here. There's no other real tested area of support until this thing would actually come all the way back. It's a floor out here right around $4 or so. But it should find decent support right out here. At least it has here in the past, somewhere right around the $22 level. That is on TIBX, is the ticker symbol, Tibco Software. Let's go. Well, that's not good. My whole screen just kind of puttered out there. Let's go take a look at Tiffany & Company. Let's go look at the blue box. Folks out here, TIF is the ticker symbol. Let's see, was Tiffany out with earnings? What is behind the 4% move in Tiffany? They expect They did net sales of $3.7 billion versus $3.64. So they did a little bit less in volume and sales. Missed their top line number, at least compared to the prior year. Did earnings of $179 million versus $178. So right about in line there. This thing gapping up just slightly this morning. Let's go see what it is they're trading into. It has a most recent swing point out here at March 7th. That has 1.4 million shares. As it's trading up into it, it's trading up in there with volume. So Tiffany wants to try to take out those highs. The high is 71.08, 1.4 million shares. Let's pull this back even further here. Let's take a look at the A to B equals CD pattern out here. So the A point on this is going to be down here at the lows of June 27th. That price area 49.72 all the way up to the high that was put in on November 1st and then pulls back into December 27th. The high there on November 1st was $66.78. We take a look at the retracement that it did on that. What was that B to C leg here? We're taking a look at Tiffany. How about that? The 618 retracement. Looks like $56.24. And this thing gets down to a low of 55.83, closes at 57.03, closes at 57.34 on the 31st of December, and then takes off. Now let's take a look. So it does a normal retracement. What that says should do just a normal 1-to-1 A to B equals CD. But let's take a look at the B point as this is crossed here. We'll put that line in black. We'll go take a look at the, let me get rid of the volume lines here on the bottom, not to confuse you. And let me get rid of these areas down here, these gaps that I was testing earlier. Let's go take a look at this. So we've got a clean chart out here. And we're taking a look at the volume that it needed to cross the B point for a confirmed A to B equals CD up pattern is the volume from, we're going to use November the 1st, 2.8 million shares. As this gets above it, 1.8 million shares, 2.6 on that following trading session. That is close enough for me to, in the case of Tiffany. So a 1-to-1 takes you all the way back up to 72.91. To 72.91, it's going to take you into a little bit of a high volume high that this thing had. It did not have volume off of the top. So if you want to take a look at that on Tiffany, now the high volume high that we're looking at is when it gaps up, and it does that on March 20th, does it with 8.6 million shares. And then it goes ahead and backs off, comes back and tries to test the gap, and then just simply continues lower. But no volume off the top here. So Tiffany wants to get back and test that high. And so now we've already talked about today high volume highs as well as high volume lows. I see I got some love messages as I look into the den, and Bud, I love you too. So there's your A to B equals CD on Tiffany. And as I understand, I didn't get a chance to attend Bud's workshop, but I heard it was standing room only. So that is a beautiful thing. Our man Bud Rolf's back and sharing with all the Tigers and Tigresses here at TFNN. Just simply some great and fabulous work out there. Let's go and take a look here at what else we got here moving. Let's go take a look at something else here to the downside. Tech Data Corp. Used to do a ton of business with Tech Data Corp. In fact, they are a local outfit here, not too far down the street, TECD. That was in a prior life. They are gapping down. But let me refresh my chart out here on the screen. Just make sure we've got active data. Looks like this may be confirming an A to B equals CD down. And I suspect that it is the B point that it's breaking. So this has got some problems here. The B point that it's breaking is March 5th. Now, volume there on this equity, 867,000 shares. Gapping down this morning, it's done 114,000 shares in 29 minutes of time. Let's take a look at where that 1-to-1 A to B equals CD would take you on Tech Data Corp out here. 1-to-1 takes you to 43.09, right back into the swing points and an area of support out there. 877-927-6648. Dow's up 43, S&P's up 4. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 57. S&P is up 5. And I had an email. You know, I always talk about our hammer candles out there and just how important they are. And the question that came in was, I talk about when you see it close below a hammer candle, if you're long, you're wrong. And the question was, well, where does price then move to? Where is it that you can expect price to move to? And so the hammer candle, so let me try to answer that, and let's go take a look at it on a chart out here, and then we'll take a look at some other patterns as well. And when you take a look at what a hammer candle is doing, now a hammer candle, folks, is occurring when the market is moving lower. So even if it looks like a hammer candle is moving up, it's not. It could be a hanging man, but we're going to talk about the hammer candles out here. And a hammer candle, what it's doing is setting up a strong area of where the bulls were last seen out there. And that should be a strong area of support. And when any strong area of support gets broken, it doesn't matter really what trading system, whether it's a hammer candle that you're using, whether it's a swing point that you are using, whether it's a Three River Morningstar, whatever it might be out there, whenever one area of support gets broken, where price will travel to is going to be the next area of support. And so that's where, when I'm saying if you're long, you're wrong on a break of a hammer candle, that doesn't mean that it's going to fall off the planet and that things are going to crash or something like that. It just means that if you're long, you're absolutely wrong, and you need to know where those next areas of support are. That's why we also use the Fibonacci numbers out there, because if you know that something is up against a 0.618 level, and if it breaks that, whether it's trying to move up or move down, the next level that it is likely to move to is right in that 0.786 range. When it breaks the 0.786 range, it's going to move and make that 100% move of a move. It's going to go back to the swing point that you're doing your measurements from. Well, if we take a look at the 60, the hourly chart here on the U.S. dollar Japanese yen currency pair, here's a hammer candle that sticks right out at you. And if you were trading currency, it doesn't matter what you're trading, you really need to know what your candle patterns are, because this is the market absolutely communicating to you. The market communicates. It absolutely communicates. The bulls and bears can't hide themselves. No matter what they try to do, they just simply can't hide. And what you're looking for, one of my favorite candles most certainly is a hammer candle. In this case here, we had a hammer candle on the hourly chart coming in at 2 a.m. This is on March the 18th. That says that the low out there, $94.30, should be a support area. And in this case here, not only did you have a hammer candle on the 60-minute chart, you had a bullish engulfing to follow it up next. That is nice, and it's especially nice because you had a hammer candle, you had a bullish engulfing, and really you had a Three River Morningstar. This is a very strong area of support out here. I'll just blow it up for you on the screen because you take a look at this set of candles right here. That is telling you that the bulls are back in town, at least on the U.S. dollar Japanese yen currency pair on that 60-minute chart. Let's take a look at another hammer candle that's out here. This hammer candle coming in right here at 2 o'clock in the afternoon yesterday, March the 21st out there. Is it by any coincidence that this hammer is occurring right back here where we've got these other bulls in place? I don't think so. And when this hammer candle broke, where was it going to travel to? It was going to travel all the way down into the hammer candle that we see here at 2 a.m. We got a slight close below it, and then the bulls came back in here. And what we're seeing here inside the U.S. dollar Japanese yen, we are going to see a retracement, most certainly. And that retracement is going to likely take you back to the 0.618 or 0.786. So far, it's done a dead cat bounce. It's taking you back to 94.92. I suspect the range is going to be 95.38 to 95.70. I'll put this on a 30-minute chart here real quick. Now, if you look at this and you say you don't really see a whole lot here, what this has actually been doing, this has been making beautiful Gartley sell patterns out here. Beautiful Gartley sell patterns. Here's the first one, and we'll go ahead and draw the next one in here real quickly. Here's the next one, and that's really what the yen is doing. It's going to be making another Gartley sell pattern. Our time flies, folks. Have a great weekend. I'll look forward to seeing you either in a few or Monday morning. Have a great one, folks. Take care.